Okay, so for today, let's start with the US S&P 500 index. See what you have done for the past week. So last week, what happens is that you open so-called close down on Wednesday, and then it starts to trade up. And yesterday, kind of like gap up, and then we saw a sell down, and we have an increased volume here. So what it shows that there may be some profit taking really starting to happen in the US market. So in the coming days or weeks, we might see some selling. And furthermore, we are approaching May, and as the old saying says, sell in May and go away. So we do not know whether the second wave will start off in May. Okay, so now, and this is the Singapore index, what it has been doing. So the past week, after the selling done, basically it has just hover around this so-called support trend line. All right, so in such a so-called channel trade, channel movement, right? What I'll be expecting for Singapore is to maybe do a one last rally to somewhere around this trend line. Okay, so that trend line will be the resistance area. If there is any more one last run. Okay, so for today, this is just the overview for the US and the Singapore market. And for today, I'll just split into two parts. The first part being the more on the investors, what should we be looking at, and the second part will be on the strong stocks, what should we can trade on. Okay, so first up, let's look at one very interesting thing is called the this is the West Texas oil. Okay, this is the chart for the continuous futures for this West Texas oil, and we can see that after the whole oil crash, right, due to the COVID crisis and huge supply with no demand or little demand. Now, last week we start to see this very long down bar with a huge volume. Now, by looking at this, right, we can only say that, oh, there's a lot of sellers. But if we scroll down into the minute charts, 15-minute charts, we can start to see that right over here where the main volume is that there are actually huge demand or buying happening over here between 12 to about $15, and over here between 11 to $13. So can say in this two buying area, right, average price about $13 to $14, that traders or investors are buying into this oil or oil crisis, right, and looking for a long-term move upwards. So I'm thinking, or what this chart has shown me is that it is telling me that the downside risk is almost at its max really, and we might be looking a base formation or a turn up in this oil. So with this, we can also look at the background whereby there are starting to have news coming up that countries are looking to open up their economy, like China. They're slowly opening up. High school students are starting to go back to schools to prepare for their entrance exams. We look at New Zealand, Australia. They are like declaring victory over the COVID virus. So this might give some increased demand for oil in the whole global economy. Okay. Now we look at some stocks that we can look to for investments. Okay, Capital Mall is forming a very small base pattern. Okay, roughly about 1 month or so. Bearing in mind that Capital Mall is going to acquire Capital Commercial, to form one of the largest REITs in Asia. Okay, so this is somehow like a base formation. So if you can continue to trade sideways and move up, it is a good turnaround. All right. And in terms of the fundamentals, we are looking at a price to book value of roughly about 20% discount to book value. Okay, and seldom we can see Capital Mall in such area. Okay, and they are giving about a yield of like 6.8%. We can give it a discount due to the current situation, probably about 5%. So, and if we look in the longer scheme of things, right, this area is somehow 180, right, is somehow in the bottom support rate area of 1513 pricing. Okay, so this is roughly a good price in terms of fundamental. They are also going to report results soon. Okay. Suntec, after they report their results, surprisingly, it moved up today. Okay, and based on the results, the dividends that they have declared, right, extrapolate, you multiply by 4, is roughly about 5.2% yield. Okay, so that would be more like the January to March. Okay, but the worst crisis is in April. April is where all the shops are closed. So the next quarter might not be as rosy as this results. Okay, but at this point, Suntec is still quite undervalued. Okay, at about 40% discount. Maplecom. Now, why I'm showing more of all this commercial come retail is that judging by how China is starting to open up the economy, it's more on offices and retail space in which they allow people to start shopping, starting to get their lives back, and no one, and that's why in Singapore we're also starting to see REITs, right, with such combinations tends to move off better. Right, so this is Maple Commercial, also showing a nice base formation. This is like a cup and handle, and on the bigger pattern is like a inverse head and shoulder pattern. Okay, and Maplecom, their recent dividend declaration, if you extrapolate for the annualized, is roughly 2%, so it's not that fantastic. Okay, and they did a lot of like rental support for tenants. So most of the REITs are hit in that way. Now, if you think like China and Hong Kong is going to open up, and I heard that Hong Kong is going to open up next week. So some ways to gain exposure is Mapletree North Asia, which have REITs in Hong Kong and Japan. So here they are reporting like 8.5% yields. We just give it a discount, probably like 5 to 6%. And they are going to report earnings, well, today or roughly tomorrow. Then some exposure to the China market, Sasia REIT. This is also a retail REIT. Okay, and it has rebounded quite nicely, and now it's like forming one small little base for probably a next run. So hopefully it can rest longer and move off and do a reversal from here. Okay. EC World REIT. Also another one with exposure to China in the logistical area. You can see it's a very strong rebound, move upwards, and then here it's traded sideways. So I'm expecting it from this point, if we were to break this resistance of 65.5, it might probably reach for between 71 cents and roughly about 78 cents. And one, Valuetronics. Okay, Valuetronics have quite nice fundamentals. We're having a P ratio roughly about 7. Dividend yield based on past year is about 7.8%. And the good thing is you can see that the total current assets like 300 over million. And the market cap right now is only like 260 million. So it's like whatever they have, right, is more than the price it is. It's a very undervalued stocks. So, and here is forming a very nice base pattern. And hopefully it can continue on. All right. Hopefully it can build a nice cup pattern, and hover around here. And so this is like a cup. This is a handle. So hopefully it can from here do a breakout and see if it can trade to this area. Max price probably 83.5 cents. Okay, so this is the part for the investors. One last stock, Starhill Global. Okay, Starhill Global is one thing about Starhill Global is they have switched their dividend policy to a semi-annual dividend. Okay, and I mean Takashimaya, Ngee City, this is the property that they have. Expect the people to start shopping in Orchard again. If the circuit breaker ends in June. Okay. Now for the technical analysis part, one thing that is very from last week that I've talked about is the medical sector. So the medical small cap sector is somehow taking a breather. Okay, so after the magnificent run, last week video I mentioned to take profit already, and immediately the day after it starts to crash. So all the stocks, UG Healthcare, all the healthcare stocks, MedTech, all this all have the same similar pattern. Okay, and it's also based on the news that the masks and protective gears are oversupplied. Okay, and that's why probably the demand for masks is getting lower. So that's for this. Now, one very interesting thing from the start of the video, I talk about the oil price, and this is what we are seeing now. Keppel Corp, Monday, Tuesday, it break out from this consolidation. Okay, it did. And one thing about Keppel Corp is that it has an existing so-called partial offer by Temasek Holding at $7.30, minus off all the dividends, so probably about $7. We might be seeing a potential offer that is going to go through, right? By looking at how this move off with slightly increased volume. Okay, so if for traders, your one is to have a very low volume sideways here. You can look to enter and go for one more run at least. So in the oil and gas space, we have Rex International. There's a pickup in volume today, and it's doing a nice pattern, trying to form this pattern. So for the aggressive traders, you can look at trading the breakout of this trend line. So from here, you can trade up to the resistance area here, and then that's like one trade, and then look for the next breakout from this resistance area. Another that is somehow related to the oil and gas, Yangzijiang. So Yangzijiang, in this drop, they had a scandal. All right, I think somehow CEO ran away or something. So they somehow restructured, and this counter trend happened. And the COVID virus somehow didn't really affect them. This drop is similar to this. So the low here and the low here is quite similar. So whoever they already bought here, there's not much loss in them. So and it's easy for them to hold. It's just like half a year. So this become a huge base formation. Okay, and at this area, yes, is probably going to hopefully form a cup and handle pattern here. And if it does and break off from here, it is a very bullish sign, whereby the 200-day moving average, right, will turn up from here. Okay, so for those who want to trade a bit like mid-term trading, you can look at this stock. Something quite surprising. Genting. Okay, it's forming a nice pattern over here. All right, it's consolidating nicely with volume going down. From this increased volume in the buying up, the volume is dropping. So this is a valid consolidation. We might be looking at a breakout from here. Okay. Potential upside, roughly about this 85 cents, connecting to the 200-day moving average at the resistance. Okay, one very strong stock that move up today is AEM. Last week mentioned about AEM being one of the strongest stock, and today, due to news that they had good results, so this stock broke up and make a new all-time high price. Okay, so from here you can look for a new setup, a retracement or something, a pullback with very low volume, and then you can look to enter from there to do a trade continuation in this. So similar in the same sector. So in the investment space, I also talk about the Valuetronics. So they are all in the same sector, in electronic manufacturing. So this is UMS, testing a 200-day moving average, and probably doing a nice tender pattern over here, just at the 200-day moving. So if you can break off from here, it's a bullish sign. And we have a pickup in volume over here. It's taking out all the sellers in this. So we can just slowly inch up. It's a good sign for UMS. Another one that has a nice pattern or a reversal pattern, this is Fraser Centerpoint Trust. It's doing a little come and handle pattern this way with increased volume today. So hopefully you can look at a price breakout from here, probably in the next few days. And this is despite the earnings that came out on the 24th April. Okay, so this is what I have for the technical side on trading short term and mid term. And since Hong Kong is going to open up next week, let's look at some Hong Kong stocks. Some Hong Kong stocks that I like. This is Hagen. This is confirmed very bullish and it's a turn up. This is due to the Hong Kong protests, but despite the COVID, it's only pulled back this amount, and it has recovered and made a new high. Okay, and Hagen basically they do a lot of personal care products like diapers, adult pampers, such things. Okay, so from here we can look for a pullback to trade this. Okay, this is E high. It's an all-time high stock. All right, been trending very much, very bullish, and COVID doesn't stop them. And what E high does is that they do all the condiments, soup, paste for Hai Di Lao. Okay, so from here is an all-time high price stock and trade accordingly from here. Okay, for investors or people who like to trade mid to long term, this is Brilliance Chi, the sole distributor for BMW in China and Hong Kong. And this drop in the whole auto industry in China is due to certain Chinese regulation. So therefore, this drop. You can see that in Geely also. So for Brilliance Chi, what it has done is that it has formed a huge base over here. And despite the COVID virus, the fall is not much, in terms of the bigger picture. And this is the resistance area that we should be looking for it to break. But from here to the resistance, there's still quite a bit, like two Hong Kong dollars. A lot of space for us to trade in this area. Okay. And some stocks that we are interested in, like, and they are strong. This is Alibaba listed in Hong Kong. I think the ratio is 11 shares of Hong Kong can exchange for 1 share in listed in the US. Okay, so this is the Hong Kong Baba chart. Okay, and for this rebound, right, it's done quite a strong rebound. And this is Tencent Holding. It's very bullish, showing strong signs of more upwards to come. And probably due to most people staying at home playing games, paying for games and gems and whatever in their mobile app. So this is doing quite well. Okay, and from here I'd like to see a setup, to trade long. So this is hopefully a nice big cup and handle pattern. All right, so this is what I have for today, and hope to see you guys next week, next Wednesday.
Okay, one question. Also, because for the general market, we are may expect a second leg down. So for the investment part, would you still recommend to get in or just see how it goes further?
Okay, as investors, right, the main thing is that every month we need to contribute to our investment account, So from this pool, right, is that every month we do investments into the market. So even though expecting, as an investor, we shouldn't be like expecting the market to have a second leg down. So if it does, it's like it allows whatever that you are saving for the next month, right, to buy, you're actually buying more shares. So when the market finally turns up, right, that these small shares will be making more profits, and in the whole, make our portfolio much profitable. Okay, but if we want to time the market, then probably we want to wait a little while. But at this moment, the whole market and the news is in a contradiction. All right, the chart tells me that there's going to be a second wave down. Why? Because the three banks are weak. We look at the Jardine stocks. The Jardine stocks are weak. In fact, very weak. This is Jardine. We have Jardine Strategic. It's like turning down. We have Jardine Medicine. Testing the low again. All right. So the three Jardine stocks, the three banks are weak. So in the whole, right, the biggest market cap in Singapore are weak, which in terms of technical analysis is telling me there will be a second wave down. But in terms of the news, the the news flow are positive, is that the COVID infections rates are down. The countries are trying to open up their economies. They are trying to restart the global trades. So there is some contradiction between the technical analysis, what the charts are showing us, and what the news flow is coming. All right. Of course, there's also a third element whereby we do not know the real damage that this COVID virus has done to the global economy.
The next thing is, do you look at gold to correlate something, or don't bother?
Okay. Gold had already moved off. Okay, so in this sense, because people are already hedging their position, so gold, there will always be demand because this COVID virus will come on and off despite this countries opening up their economy. So, but if you look at the gold chart, right, on a long-term basis, let me use this gold futures. You can see that gold has formed a very big cup pattern. And if you were to form a handle pattern, we might be seeing, right, probably in the next few months, you might be like trading sideways. And if we were to break out from here, right, we can see a huge gold rally all the way to 2005 or something. So, what this tells me that I'm very cautious or afraid of holding US dollar, as the US government might devalue their currency. So this is what I see from the gold chart. They because they are now doing a huge quantitative easing, a QE, and the first few QEs or this whole period, right, they has already been devaluing their US dollar. You can see the gold had rise tremendously. All right, and as they start to cut down on their QEs, since 2014, gold has been stagnant. And with the crisis that's happening, gold starts to shoot up again. And then now the government is doing quantitative easing again. So from this, right, the long-term impact, I might see that there's a high chance gold might break out from here. On the upside to probably like 2005.
Okay, thanks.
Yeah.
Fusion, so this kind of means gold is actually quite a good hedge if you are investing in US stocks, because you get US dollar as exposure there.
Yeah, correct. So like for example, Ray Dalio all-weather strategy, he has a 7.5% weightage in his portfolio. So that's how he used gold as a way to hedge in his portfolio, to minimize the risk and to curb the inflation.